Welcome to Microcap Explosions and Classic Value Investors. My name is Mariusz Konieczny, and we are doing an interview with Robert Bugbee, the CEO of Scorpio Tankers. Robert, thank you very much for joining me.
Marius, thank you too.
Robert, since the last interview that we did, could you maybe take a few minutes, just freely update my listeners on what you would like to update them on, whether it's on the crude side or product side, whatever comes to your mind?
Sure. Well, for Scorpio Tankers, obviously we're really focused on the product tanker market. I think that if we take the last two significant events, one of which the last interview with you and our actual earnings conference call 2 or 3 weeks ago, the most significant event that's happened for Scorpio Tankers is the now the declaration of at least two vaccines that by all medical accounts seem great, and that's in the expectation that we may have more coming. Now, what that's simply done is that it's taken a very dark cloud that was on the horizon, whereby no one was really sure about when there would be a recovery. Some people were saying there could never be a recovery, that rates would be terrible for 2 years, 2.5 years, and we ourselves, as anybody listening to our last conference call, one of the key concerns there was, we outlined it, that we had prepared ourselves for enough cash, enough liquidity all the way through, with the market being extremely weak until the end of next year. And the biggest difference, a couple of weeks on for that, is that these vaccines have replaced that very dark cloud on the horizon with a sky that's brightening, that soon we know the sun is going to come up, that at some point next summer we are going to have not just a number of people in the developed economies that will be vaccinated, but they will turn into the season again where there'll be greater control, et cetera, et cetera. And so we can reasonably expect that the economies, that the consumption side, demand side for petroleum products will be going up earlier than where we could reasonably expect it 2 or 3 weeks ago. And I think the markets in our market are reacting to that. We're starting to see traders talk of the future of a contango that's not a contango because there's too much product in the present and not enough demand, but rather that in the future there will be pent-up demand, the opposite, at some point, that when we come off lockdown, eventually, that all of us, I think, will have trips or a bucket list of things that we have to do, whether it's meeting friends, family, or going on various trips, which is likely to re-stimulate demand again. So I think that's it's a dramatic change. I mean, it is huge, that difference between not knowing when a vaccine will come and knowing that this week is better than last week's expectations. We have the second one. Very shortly, we're probably going to have the third, the fourth, and the fifth. And then that's going to roll out, and then, we'll be through this position.
I think we are in a very interesting situation right now because, like you said, the pipeline of vaccines is finally starting to come on the other, go out on the other end, and at the same time we see COVID cases rising all over the world, and lockdowns being instituted again, while at the same time we are just weeks away from a vaccine.
Yes, and it makes it very complicated because right now the markets are complicated by, yes, Europe went into a lockdown, 2.5 weeks ago, and cases were going upwards. But I believe in the last days, the actual number of COVID cases is starting to fall again. That is happening, and that's a good thing that they're able to do that immediately. They know that those things that they implement to cut it back are working. We know also on the other side that the southern hemisphere countries, Australasia, South America, those countries are, coming into their summer season. And if what's going to happen, what happened in for example, the U.S. and Europe over the summer, that COVID cases retreated, happens in the southern hemisphere, then that will be very good for our demand. And then at the same time, as we're seeing the temperatures fall, and we're seeing the inevitable turn to winter, which has always been a generally stronger season for product tanker demand, because we have heating working in the northern hemisphere and gasoline working in the southern hemisphere. And we're having the early indications again that winter will happen. It is getting colder, and more importantly, that's being reflected in the rates. We've seen the LR2 rates strengthen almost every day now for the last 2 weeks. We should also remember that you're correct that that's happening in Europe, correct happening in the United States, but the U.S. is not a place that we do much shipping to. We take products from the United States, and so we're seeing, we don't take products to the United States. But what we are seeing to counter to there's a further positive is the Asian countries, China, Japan, those countries, Taiwan, those countries' demands are, almost back to normal. So it's tricky. It can go one way or another, but we do have now that backdrop of knowing that there'll be future improvement, and that winter is coming.
How is the destocking look like on the product side?
Products is pretty favorable, actually. Products, the stocks have, unlike crude, where there's lots of stocks around, products has fallen much more rapidly. And there's every reason to think that in the next 3-4 weeks or so, we could be almost back to normal in terms of product inventories on the marine side. It's fallen a lot, and you're even seeing on a country basis. I mean, yesterday, I don't know what will be the confirmation today, but we saw product inventories fall quite steeply in the United States, and that's the general thing, that the product inventories are falling. Mm-hmm. And we have that also against the backdrop of newer, more efficient refineries are coming up. So we had another new refinery come up in November, in late October, early November in the Middle East. We'll have another one come up in January. And there, if we go to our website, you can see that there are a number of more inefficient refineries that are closing. So we continue to see that dynamic, which is favorable to product tanker ton miles.
I remember when I asked you a while ago why you chose to be in the product side versus the crude, and one of the reasons that you gave me was that you saw a new refinery coming online in Middle East, and now what you're saying is that this has already happened.
One came up they're not into full speed yet, but they came up in early November, and another one's going to come up in January. And you're also seeing, more, actually the Chinese refineries have added to product tanker ton miles, because those refineries export as well, the same as the U.S. refineries do. So you get far more arbitrage and ton miles. And then you've seen refineries close in Australia. Another one's due for closures soon. And you're starting to see the potential for pretty big, meaningful closures of refineries in New Zealand. So very simply, you're seeing all the signs that going forward, there will be a higher ratio of clean petroleum products transported by sea compared to crude oil. Because, for example, those refineries coming up in the Middle East for exporting products clearly take a barrel of crude oil away. So instead of shipping a barrel of crude oil to somewhere to be refined, you're now going to ship a barrel of products. The same as Australia and New Zealand. Instead of shipping a barrel of crude oil to Australia and New Zealand, you are now going to be shipping a barrel of products to Australia and New Zealand.
Yeah, that's an interesting dynamic. And would you say, like in general, uh, the what is bigger, crude market or product tanker market?
Crude, and that's the other important thing is the crude market is bigger by quite a large factor. I mean,
Right. So a change,
huge factor.
a change like this, increasing the
Yeah,
demand for
it,
the product tankers, it has a big impact on the product tanker market.
much more significant for the product tanker for two reasons. Is that a million barrels of extra growth in products is huge in terms of demand. Not just because the baseline demand is much lower than crude, but also the number of ships. I mean, remember in product tanker market, our largest ships are only 100, 105,000 deadweight, whereas the crude oil vessels are 3 times as large. And so you're not just having a huge increase over the demand that's there, but it's a huge increase on the number of vessels that are there too.
Yeah.
So, it's enormous in that sense.
And you touched a little bit on the rates. I believe you said LR2s. Can you talk a little bit about the other vessels and how the rates are doing
Sure,
on
sure.
those?
Well, we have a world that's split at the moment, so split in size, range, and geography. So east of Suez, not just the LR2s are doing better, and LR2s are in fact doing even better than VLCCs or Suezmaxes in terms of tankers. They're doing the best of all those categories at the moment. But not only is that market doing well, but also in comparison, MRs, the smaller ships, are doing better east of Suez. The Europe we're waiting for Europe. It's obviously suffered, as you pointed out, from the lockdown short term. We haven't yet got winter to Europe, and so we haven't got the ice class trading yet that the smaller handy sizes would be getting, and nor the heating oils moving. In the Western Hemisphere, if you come across to another huge trade for us, which is United States to South America, that has been particularly weak over the last 2-3 months because of two reasons. One, South America was effectively in its winter, in its height of its COVID. And as I said, they're slowly coming out of that now, so you would expect their demand to increase. And there's been a lot of crazy stuff going on in the U.S. Gulf with hurricanes, which have really inhibited the natural distribution of vessels and led to delays in shipping, and in fact, in some instances, closures of refineries too. But hopefully, in a couple of weeks, as we get past Thanksgiving, and normally a week after Thanksgiving, that trade and that area of the world starts to pick up anyway.
Okay. What about scrapping? Do you see anything happening on that side?
I don't think we must even consider scrapping in the product market. It's not something that we worry about. That's more of a crude oil thing. And I think another thing that is great about the product tanker market, and thank you for bringing it up, is the supply side. Is that not only do we have a much better demand ton-mile profile than crude, but we also have a much better supply profile. And that's because fundamentally, once a vessel reaches over 15 years old, it's not scrapped per se, but it's removed from the premium clean petroleum trades. So most of the trades that involve clean petroleum products or vegetable oils for human consumption require much newer ships, and once the ship crosses 16, it must go into the dirty trade. So that means effectively in terms of commercial terms, competition terms, you are getting scrapping, and that without actual having scrapping, and that is going to become huge next year. I mean, to put in some perspective, including vessels that were ordered pre-COVID, there've probably only been around 40 MRs ordered all year, and a considerable amount of those were ordered pre-COVID. And so the ordering of MRs has virtually ground to a halt. It had the lowest order book for 20-odd years before the start of this year. That order book has only gone lower. And to give you some kind of comparison, there are going to be 96 MRs next year that will turn 16 years old. So you are going to have periods over the next 2-3 years where at certain times the effective commercial supply of MRs is going to actually go negative for a couple of months, because you may have a couple of months where deliveries of vessels are just less than removals as a result of crossing 16 years old.
Since we're talking about the supply, one of the readers wanted me to ask you about Unipack, how Unipack is entering the clean market, and how you think it would impact the rates and supply.
Sure. Well, if we just start first, if the reader might indulge me with China itself. So as short a time ago as 6-7 years ago even, China was just a no-show as far as the product tanker market was concerned. It didn't really import products, it didn't export products, it just whatever, it just was. Rennie was a crude oil importer and served itself in terms of products. Then, as your reader has pointed out, Unipack started to make various investments in that space. They bought into a joint venture with the Saudis. They've been a good customer on the LR2s, exporting primarily high-quality diesel from Middle East to Europe, for example. They're well set for the further expansion of Middle Eastern refineries. And back in China itself, every day is becoming the trading with regard to Singapore, China, and every day is becoming, as their whole refineries expand and their use of products expand as a country, they are adding to demand for products in two ways. One, because they're now able to become exporters and play the arbitrage just like any other area in the world. Sometimes they're longer product, sometimes they're shorter product. So now they're both exporting and, on the margin importing products. And as importantly, they've been buying product tankers for their own, domestic use, because their coastline is so large. And, just like other areas of the world with developed refineries, such as the United States, such as Europe, there is trade, within that region, owned into China trade itself.
Okay, let's shift a little bit more towards Scorpio tankers. And so some of the things I would like you to talk about, you did have buyback authorization in the past. Could you talk about your debt situation and your upcoming capex requirement?
Sure. So the upcoming capex requirement is very minimal going forward. We have a few scrubbers left to go. Those are predominantly already pre-financed, and again we have that outlined on our website in real detail. And I think that's one of the great things that Scorpio is in a great position of. Finally, the capex program has finished. We don't have any more new buildings. We don't have, apart from these few scrubbers to complete, we won't have any more capex going out on scrubbers. And during this last, 14, 15 months, we would have dry docked 75% of the fleet. So for the next period going forward, hopefully what we see is the recovery period. all of the cash point generation point break evens are quite low, and all of the cash generation is effectively above the OPEX cost, and interest is going to come back to the shareholder in one form or another, whether it's debt repayment or buybacks, etc. We outlined on the call that we had $200 million, $209 million of cash as of 2 weeks ago, that we had other non-equity liquidity coming in over the next few weeks, and that we were working on other liquidity that would take us in total with a 200, well past with the scrubbers, well towards $350 million. We also indicated at that time, and the market has improved since that time, that had we had ran the market all the way from that date, so early November, all the way through to December 31st, 2021, so all of next year, every day at slightly less than the rate that we were saying it was on the day of the conference call, which is pretty much the low of where it's been all year. The company would exit December 31st, 2021 with $100 million worth of cash. And that that's without us working on any other liquidity, non-equity liquidity positions. So we felt at that time, when there wasn't any vaccines developed, et cetera, that we would get, we would have a much more favorable position going now. Because obviously our expectations today of a market are much stronger than what we thought they would be 2 weeks ago.
Okay. And the final question that I have to you, which is outside of Scorpio tankers, if you can talk about Scorpio bulkers a little bit, because you made recently a big strategic change.
I'm sorry, Marius, I didn't hear that one properly. If you could just say it one more time.
If you can talk about Scorpio bulkers, You made a huge change, strategic change. If you can address this a little bit, even though we're talking mostly about the tankers here.
Of course. So there are two aspects in this change. First of all, Scorpio bulkers has not, the investments in dry cargo just have not performed very well at all, and have not performed very well in the light of net asset value. You have a very highly liquid market there in terms of the vessels themselves, but unlike the product market, where we have dynamics that we pointed out that are particularly favorable to, you have a market that's more consolidated, you have a market with very good demand curves going forward, et cetera, we believe that dry bulk didn't really follow that so much. And then when COVID came in, it accelerated, for example, the renewables, whether that's wind or solar, and really put the long-term viability of coal, which is about 30% of dry cargo movements, at risk. And very simply, in its first instance, with the stock trading where it was and where it is, so at a significant discount to steel, the first thing you would be doing would be selling assets, selling the vessels, and securitizing, the net asset value above the steel. Then at the same time, we have been watching the wind, offshore wind, and installation of offshore wind, particularly in these last years. And we had the opportunity, and have the opportunity, to shift perhaps the capital allocation from the capital that we would raise from selling the dry cargo vessels into offshore wind, which has tremendously good um,
But
demand prospects.
you would still be in shipping. You would just be transporting. Uh, you would be transporting what? What
Well,
kind?
they're maritime vessels. They install, so many of you would have been accustomed to seeing, wind turbines. You see them in the fields when you're driving. You can see inshore wind turbines sometimes when you look out to sea. And the wind turbine manufacturers have now developed, literally giant turbines that can be put, miles out to sea, well over the horizon. And this benefits from a number of things. First of all, we can't see them from the shore, even the highest rooms in a hotel or a Manhattan skyscraper couldn't see them. Secondly, when they are offshore, the land there is less expensive. And thirdly, offshore wind blows steadier and blows stronger, so therefore it's more economic and efficient. And those very big turbines need to have a new generation in themselves. Those turbines are a new generation, and they need a new generation of wind turbine installation vessels themselves that are able to have huge cranes. I mean, these cranes are, 180 odd meters high, and they can lift these turbines after, the vessel itself goes along, and rather like a jack-up rig, it drops legs that stand onto the seabed and jacks itself up above the water to create a stable platform that the crane that the vessel that's on the vessel is then used to put the turbine in place.
So the way I'm seeing it, by doing this transition, you would become a kind of like a niche transportation company versus a
Yeah, I
commodity.
would say we would be using the skills that we have had in transportation and the maritime industry, such as we've built sophisticated, high-quality vessels, and many of the group itself, well beyond Scorpio bulkers. The group Scorpio has built containers, gas carriers, tankers, dry bulk ships. We've built quite sophisticated dry bulk transportation vessels too, with cranes, etc. So we're using all that, and we've been in the offshore business. We've been using all those skills to create something that is maritime in the sense that it is a vessel that puts these turbines in place offshore. But we're not really transporting things; we are installing things.
I see, I see. Okay. All right, Robert, do you have any final thoughts
I
before we
don't
go?
know. I don't. That's great. Thank you.
Okay, well, thank you so much for taking the time to do this.